the entire crypto market looks good, green. But the issue is when it slows down a little bit, the talk about a bear market come back in. So right now, you look at this chart and people would always suggest that the market is about to go lower. This is actually a chart which you are looking at for the total market cap, where it's like, okay, we are going to go retest this level which we broke before, agreed, that will be a resistance. But now the question is, are you looking at this on an entire framework? Because here, this altcoin market, fine. If you follow this on a weekly chart, this is not zoomed in daily chart, this is a weekly chart. On a weekly chart, you actually get to understand that it's having something similar with the past. Now, if you want to reduce the noise from that, you can go on to a monthly chart, zoom even out, and then look at this. Now ask this question to yourself. What do you actually see? There are some key parameters inside this chart which actually suggest you like, okay, we are bouncing off. So you can neglect that and say this time it's different. It's completely up to you. But if you are looking at the general market, there's a lot of information to actually digest, right? This is Tesla. What can you actually see this? Now, there's nothing big here. It's just easy technical analysis where you can understand these, right? Then you look at the crypto market. You see some similarity with the stock market. You go up, you do the reaccumulation, and then you go up. So the catch here is a lot of people doubt this for a distribution pattern, saying it's going to go down. Fine. But what happens? If you zoom out, you'll see this is happening again and again in the history. So that's not just a one-off. If you zoom even out, you see that happens over and over and over again, because this is human beings with money trying to make more money. The psychology is kind of same. It kind of rhymes. So here, if you are in this market, now the question is, do you actually look at the market in a proper way? Because as you zoom out, this is what you see for Apple. Fine. You were inside one pattern, then you broke higher, you continued in a new trend. But when you zoom in, you kind of get something new. Okay, this on a weekly chart is really big deal. So if you understand that, now you are looking at the general stock market and asking this question to yourself, okay, what am I looking at? Right? So the economy is in water. I agree. The economy is going through the drains. But the stock market shows like it's bouncing higher. Now, if you are looking at this, it's like, okay, from a month and a half, the market is going back up. What really is happening? How can this impact the crypto market? Because most of us care about the crypto market and precisely the altcoins and XRP. So when you are looking at the Bitcoin dominance to understand where it's headed, it kind of gives you that idea. Now we are going to break all of this one by one, so you now know where we are headed, because we are here in the crypto market and we need to know what exactly is happening in the market and the crypto market and stay away from these kind of stuff. You don't want to lose your capital to just this. If it's a crash like Luna Terra, you can't do much. That's like a black swan. But these are like your carelessness. So you don't want to do that. So shout out to James for putting this one out. Now we're going to break these things down and understand like, okay, what exactly the market is suggesting you so you can prepare for the better for tomorrow. Welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. Now guys, I would really like to actually highlight this. This is a Tesla chart, fine. There's a monthly chart. So this is like a macro view. So when you're looking at this, it's easy just to look at the price, the direction of the price, and then the strength. So here on the RSI, you kind of see like, okay, the trend is slowing down, whereas the price is trending up. So you actually got a bearish divergence, fine. But does that actually mean you're going to break lower and go all the way down? Okay, there is a possibility, but we go back in history. We look at what history shows us. Fine. Now, if you look at this, you can agree that you got a similar pattern there. But the difference here, which a lot of people would be talking about right now, now we're going to go down 50%, we're going to go down 80%. Now, I'm like, okay, back then, these days, if you are looking at the inflation, we didn't have the current rate of inflation. So right now, when the market is down 50%, and with the level of inflation which we have, now look at this peak. It was early 2021. So from that time, inflation has been building up, piling up, going to the high. And stocks dropped 50%. Now that actually means, or it at least did not do much upside, and it's still consolidating in this range. So with the inflation and the drop, the stocks are already at the bottom. Now there will be companies which are going to go bankrupt. So those companies are going to go 90% down. Stocks are like a company. You're buying a company, a part of a company, right? So now, if you take that into perspective, here you got the bearish divergence. Great. What happened? Did the price go down? No, it consolidated there. Yeah, you got 51% drop in price, but it did not go all the way down to where it came from. So this is one of the reasons why you need to understand where we are coming from, where we are right now, so that you can have an understanding, a better understanding about where we are going to go. Fine. Now, that's just one asset in a big asset class. Fine. Now, this is the total crypto market cap, where you're eyeing at this like, okay, you still have room to reach here to the resistance in the RSI. Great. But you're already close to this level of resistance. So one thing you need to actually get is a breakout in the altcoin, which can push higher. Fine. Now, whenever the market goes up in general, you kind of see like, okay, new money is coming into the market, or the smart money has already entered and they're bouncing back just to put that hook for the FOMO, the retailers. Great. So even if you are going to go down in next 12 month scenario, what if next 3 months is like you're going to go up? No one knows, but you can prepare for that, right? Because when you look at the history, you kind of see these drops. Now, if you zoom out for hundreds of years, you still see these drops and the price going back higher. So to get a perspective, last time it was like 36%. So this is the S&P 500 on a monthly, the macro one. I'm not actually zooming in, taking just one day, giving you the macro outlook with a daily chart. I'm trying to put as long as possible so that you and me are on the same page understanding this. Right now, you're close to 27%. So you still have a little bit of room, but the question is, are we going to retest the top and then drop? No one knows. But right now, when you zoom in, you kind of see like, okay, there is a huge possibility that's going to go up. Why? Big assets inside that S&P 500, like Tesla, like Apple, they are slowly moving up. If you look at Netflix, that bottomed around 160. We have that call. Now, maybe it's around 200. It's still moving up. That's actually a great news if you are in these kind of assets, understanding that. Why? Here in Apple, if you remember, we talked about the double bottom. And that happened to be a double bottom. Because the price was making a lower low, RSI was showing you a bullish divergence. That's a great thing, bullish divergence at a support. Then what happened? The price went back up. Now you're testing this level of resistance. Now this is a descending broadening wedge, which usually breaks to the upside. Great. Your RSI is already breaking to the upside, continuing that momentum to the upside, with your MACD crossing to the upside with a huge volume, and you're entering to the positive territory. You're not deep down in the negative territory in the MACD. You're entering to the positive one. And if you do, that does mean you may get a big breakout here and continue to the upside. So if the stock market is about to go for a rally, maybe that's the blow off the top. Maybe that's a fake run. But if that happens to be next 2 months, 3 months of a fake run, that is enough for the crypto market to go higher. When the crypto market goes up, It only needs that 2-3 months to do this magic run up. So if you are here in the market questioning whether we are going to go down or we're going to go up, the final decision is yours. It's your portfolio, your money. But taking the wise decision and educated decision is what I consider to be most valuable, because no one knows what's going to happen tomorrow. But what you can do is to prepare yourself as much as possible by learning from the market. So if you are here, that's for a reason. We try to give you that perspective directly. So now on this macro chart, a monthly chart, the biggest issue for crypto is you don't get hundreds of years to observe. Now we are looking from 2013 and that's all we get. Fine. But within that time frame, if you are going to see what noise happens, there's see everywhere. You can get this noise breaking above, faking out, coming back down. You get those. Fine. But if you generally understand one thing, this is the all-time highs. You go back, you test the all-time highs after a long bear market. Then you do a consolidation there. Yes, that drop inside that one is 50-60%. So that's not small thing. Now we go back to the Tesla and look at what happened. You consolidated there for a very long time, but your drop was like 50%. You did not go back to the bottom here. So if you consider this asset class as something where new money is coming in, where institutions are entering, putting their money in, saying this is going to drop another 50% from here, can be too extreme. Now, if you try to be neutral without, being too much bullish, too much bearish, now it gives you more understanding of, what is right, what is wrong. So if you feel there is something valuable in this idea which we are presenting here, hit that like button. And if you have certain comments like, okay, why can't you consider this? Why can't you look at this? Let me know that. Put that in the comment section below. Now that's a debate, right? You go through that, you look at all factors and try to see what's coming ahead. Because here, if this is the altcoin market, it's showing you it's going to go upside. And one of the argument here is the Bitcoin dominance is showing it's going to go to the downside. We had 3 months. Right now, it's the 3rd month. We are in negative. We're going down. Once we actually tried to go back higher above the moving average, but we failed. That's important. Buyers tried to push the price back up for Bitcoin. Money moving from altcoin to Bitcoin. But what happens? Immediately that reverts, goes back into the altcoins. So you can actually observe that altcoins are gaining more or Bitcoin is reducing its dominance. Now, from the history, it's reducing. The trend line is to the downside. It's not going up. So you can literally listen to a BTC maximalist saying Bitcoin is the king. It's going up, up, up. Yeah, in price terms, it is. But if you look at the general market and what's happening inside that market, that's an entirely different story. So if you are here observing this, what do you think? I feel like this is going to slowly go down, test the 39 and break to the downside. Because on the other side, the altcoins are suggesting that it's going to go up. On a monthly, you're going to go retest this moving average and chances are high that you're going to break through that. Here it's the same from this one. It's just zoomed out view, but you get little noise, so higher clarity. Your all-time highs, you break that, you retest that all-time highs and then bounce. Again, here your close, monthly close. That's this line. You break that, you come back, retest that, consolidate there, and most likely you're going to do the same. So we won't say this time it's different. We will try to look at the history and say most likely that's going to repeat or at least rhyme. And at least as of now, it does look like it is rhyming. Now, we go on to the XRP. Yeah, poor old XRP. Fine. But we are still here. Those who don't understand is like, okay, I've seen people dropping comments like, I've been here for 10 years and I'm not making money in XRP, and I'm scratching my head. 10 years and you're not making money? Seriously? If you were here in early 2017, you are already way higher in profit. At least 100x if you bought during these times. The market went 700x after that. Then yeah, we dropped 70%. Maybe right now we dropped 80%. Great. But still you have money. If you put $1,000, that's now sky high. Now, if you entered here at the top or here, yeah, that's wrong timing. But what happens is like when you try to time the market and when you don't have time, that kind of kills your positions. But if you time the market and you are wrong and you still have time to put into the market, you become right. Given that the asset you chose has fundamentals, it's still valid, it's still valuable, and the adoption is increasing. Now, one of the things which I really want to give you guys is this is top cryptocurrencies. You see, XRP is one of which is being chased by the SEC, right? And it's been long time they are doing this drama. And we are still here in the top 10. Why is that? You, me, and others who are buying and holding this asset, we're not dumping it. Why? There is a reason for it. You understand the fundamentals, you understand the technology, you understand why it has been designed in that particular way. And right now, with the liquidity issue going all around the globe, banks, central banks, all of them trying to move on to a DLT platform, an interoperable layer, you need a settlement mechanism where liquidity can be like this. And I definitely believe one segment of that is going to go through XRP Ledger. So if you are understanding these fundamentals and you are looking at the macro scenario, it's going to get much worse. I agree. Because these are not actually a good sign. People trying to look at how to sell their house. Now, what you have to understand is if you go back in history, look at these. We had major drops in 2008. But if you look at where the market bottomed and then try to look at where the real estate bottomed, there is a difference. Real estate is lagging. Why? You go to the stock market, you click, sell, done. But in real estate, no. If you want to sell a house, you don't just click, sell. You need to actually get that quote. It takes time. Maybe 2 weeks, maybe 3 months, who knows? So it's always lagging. So if the stock market is bottomed and we are going back up, you may still see housing market going down. So one of the factors here is, yes, it's going to go down, but that may not mean that the entire economy is going to go down, because here we are already in a recession, in my opinion. And if you're going to go down, then that's going to be a global economic depression. Now that may last way longer than we all anticipate. Now that's a scary part. But even in between, with all these stimulus coming from the governments, what happens? Markets go back up. So yes, economy is going through the drains, but the market is going back higher. We saw the same happening from year over year, and we are watching that right now. If you have assets, financial assets, you make the most of it. Why? Because most of the money which is being printed, which is being put then as free money into the market, goes back into these financial assets one way or the other. So if you are here, what you need the most is first buy that one financial asset, enter into the market. And if you're watching this video, most likely you already have a lot of it. Or at least considering your total capital, you do. Great. Now what you need, second important thing, is patience. Without that, it's going to be hard. Imagine those who bought this asset didn't have patience. They waited till 2019, 2020 and exited the market with 50% loss because they bought at the top. Great. If they had another couple of years, it went from 300, it went from 38 all the way up to 1,250, close to 1,300. So imagine in stock market, getting 10x is like gorgeous. So if you can make 30x, that's huge. But what was the factor? Patience. Now, that is the same with all the asset class you can literally look at. It's all financial assets. It's all risky. If you don't have that time to put into the market, and if you need that money in next 1 year, next 2 year, the market may go against you. You have to take the loss and move out. That's a bad scenario. So if you are putting money into the market, make sure you don't need that money at least for next 3 to 5 years. Now, if you are already in the market for like 2 years, I'm not talking about next 3 to 5 years. You already put in 2 years. So that means you may only need another year or two, and the market gives you what you want, or at least what the market can do. Because if you are looking for like 10,000x and the market can do 100x, that still is a great exit strategy if you have one. Now, going back to crypto, if you are looking at all of this, you definitely would be watching like all of these coins are grinding back higher. Now, on a daily, you can go to the other side of this and say like, okay, these are correcting. But they have done massively for last 30 days, last quarter, right? One of the reasons why you need to understand that is like, okay, weekly, there would be volatility. Daily, there would be a lot of volatility. But if you are trying to put this into perspective, this is what I talked about. Quant on a daily is going down, one of the most down on last week. But it's one of the most which went to the upside in last quarter. So you need to first look at like which asset you are selecting, where it is on last quarter and where it is right now. Because if you are seeing a correction, it's a buy the dip most likely. So if the trend macro is to the upside and you're getting it just below the mean, you get a great buy. Now it all depends on how you analyze that particular asset and the market. Guys, if you are looking to make money, trying to get positioned well in this market before this actually starts running this crazy next big wave, you can look at the Patreon. The link is given in the description below, where you really get to actually know, like, if you have 10 assets, go through all those one by one, 10 of them, and break it down. Understand which of them are high risk, which of them are low risk, fundamentals, and just gambling. Because being serious, I've seen a lot of people and they're like, okay, maybe 10% is gambling. Now, if you have the risk tolerance, it's completely fine. Just, not everyone has that risk tolerance to do like that. Fine. Some who are really young, they tend to do this. And even some of them who are older, they're like, okay, 5%, I'm going to put it like, just a lottery. Whether it goes up, whether it goes down, I don't care, because I have a lot of fundamental assets. They are heavy on the fundamental assets and they do balance it properly. So having the right balance for the mix of your portfolio is key. So guys, if you want to take that in my perspective, you can look at the Patreon. And guys, if you're receiving value, again, please do hit that like and subscribe button if you receive value from today's video. That's it, guys. I'll meet you on the next video. Bye for now.